Hey traders, welcome back to the channel. If you're new here, make sure to hit that subscribe button because today we're diving into an important topic: how to spot scams in prop trading firms. You've probably seen firms promising the world, but I'm here to help you avoid falling into those traps. By the end of this video, you'll know the red flags to watch for and how to protect your capital. Let's jump right into it. Before we dive in, smash that like button and comment below if you've ever encountered a shady prop firm. Let's hear your stories and help each other out. First up, fake Trustpilot reviews. A lot of these scam prop firms create a false sense of credibility by boosting their reviews with fake accounts. Look for overly positive reviews that don't offer much detail or sound generic. If all the reviews seem to come from one source, like employees or paid reviewers, that's a red flag. And if the firm has an abnormally high rating without substance to back it up, be skeptical. Tip: always read through both positive and negative reviews to get the full picture. Next, be cautious with recently launched prop firms. New firms might seem exciting, but without a proven track record, you're taking a big risk. Scammers often set up fresh firms to lure traders with low prices and big promises. Wait at least 6 months before engaging with a new firm to see how they perform. Established firms with a solid history offer more security and reliability. Tip: don't be tempted by unrealistically low challenge prices. If it sounds too good to be true, it probably is. Now let's talk about CEOs promising quick riches. If the head of the company is out there guaranteeing massive profits in no time, be very cautious. Real trading involves risk, and no legitimate CEO would promise fast wealth. These exaggerated claims are usually a sign that they're not focused on your success, but on getting your money. Tip: always look for transparency and leadership and avoid firms focused solely on the profit potential. Next, watch out for firms promoting high-frequency trading, HFT, in demo environments. Some firms allow HFT during challenge phases, which could be a sign of poor risk management. Be cautious if demo results seem too good to be true. HFT can skew results and mislead traders. Tip: stick to firms that emphasize transparency and realistic performance metrics. Another red flag is unrealistically low challenge prices. Legitimate prop firms offer competitive profit splits, but if a firm is offering splits way above industry standards, be wary. Firms that offer extremely high profit splits or very low entry prices are likely trying to entice you into something that isn't sustainable. Tip: stick to firms with challenge prices and profit splits that align with industry norms, usually around 50 to 60%. Lastly, let's talk about unprofessional staff. If you notice poor communication or unqualified support, it's a major red flag. Staff that can't provide clear answers or seem inexperienced in trading could mean the firm isn't legitimate. Poor customer service or a rude team often points to disorganization or unethical practices within the firm. Tip: always interact with support before committing and gauge their professionalism. If you're finding this video helpful, make sure to hit that subscribe button for more tips and strategies. Don't forget to like this video and drop a comment if you've had experiences with sketchy firms. Let's keep the conversation going. So there you have it. Now you know the key red flags to look for when evaluating prop trading firms. Stay vigilant, protect your capital, and always do your due diligence. Keep an eye out for our next video, where we'll be covering the top prop trading firms to consider in 2024. Until then, happy trading, and remember to always trade smart.